Robert Mundell, Nobel Prize-winning economist for his monetary theory, was Art's mentor. And so I asked Art to battle test this white paper. And he did. And at the end, he said to me, "This is what I've been waiting for almost 50 years, since we closed the gold window, 1971, here in the United States. This is a global rules-based monetary system. And it's digital and decentralized. It's private, so no government oversight, no throat to choke either." I said, "Okay, Art, this is a very big idea then." And he said, "How big is it?" And he said, "Well, how big is the U.S. monetary base?" And at the time, it was $4.5 trillion. Today, it is $7.5 trillion. So right then and there, I knew we had something big. And we gained our first exposure to Bitcoin in 2015 when it was somewhere between $200 and $250. Today, it's $73,000. And we think the journey has just begun.
Don't forget to subscribe, traders. Let's continue with the interview to analyze it later and also comment on some of the most important news of the day. In delving into the intricacies of modern finance, one cannot overlook the revolutionary emergence of Bitcoin. Its significance transcends mere digital currency, rather, it embodies a profound shift in monetary paradigms. This realization was underscored by the insights of luminaries like Robert Mundell, a distinguished Nobel laureate in economics, whose mentorship enriched the speaker's understanding of monetary theory. Within the expansive landscape of economic thought, there emerged a distinct admiration for a rules-based global monetary system, an idea championed notably in a seminal white paper. The speaker, deeply influenced by Mundell's teachings, echoed this sentiment, highlighting its potential magnitude vis-à-vis the U.S. monetary base. It was a testament to the power of structured frameworks in shaping the contours of economic stability and growth. However, amidst these discussions, a singular entity began to assert its presence: Bitcoin. Its advent heralded a new era, one characterized by the rise of digital assets and decentralized finance. This recognition wasn't a fleeting moment, rather, it was a realization that dawned as early as 2015, when Bitcoin emerged as a formidable asset class with exponential growth potential. In essence, the journey through monetary theory and the evolution of financial systems leads inevitably to Bitcoin's doorstep. It symbolizes not just a digital currency, but a harbinger of change, a catalyst for reimagining the very foundations of global finance. In the narrative of economic progress, Bitcoin occupies a pivotal role, a testament to the enduring dynamism of financial innovation and human ingenuity.
We've gotten the regulatory green light of sorts. Not that we have Gary Gensler fully on board, but the SEC has given this ETF the green light. The second paper we did was Bitcoin, ringing the bell for a new asset class. That was 2016 in collaboration with Coinbase. Coinbase was doing its Series B funding round as we were doing that paper. And these are still up on our site if you'd like to. This is truly a new asset class. So not only is it a global monetary system, big idea, number one, but it's a new asset class. That's a very big idea. We haven't had a truly new asset class since the 1600s, equities. You know, you can call real estate and commodities and all of that, but this is a truly new asset class.
In recent developments within the financial landscape, a significant milestone has been reached with the approval granted by the U.S. Securities and Exchange Commission, SEC, for the launch of a Bitcoin exchange-traded fund, ETF. This decision marks a pivotal moment in the evolution of digital assets, particularly Bitcoin, which has long been the subject of scrutiny and speculation within traditional financial circles. The regulatory green light from the SEC underscores a broader acknowledgement of Bitcoin's legitimacy and potential as an investable asset class. This approval signifies a notable shift in perception, moving beyond skepticism towards recognition of the intrinsic value and utility that cryptocurrencies offer within modern portfolios. It's worth noting that this development doesn't occur in isolation, but rather builds upon previous milestones that have paved the way for Bitcoin's acceptance within mainstream finance. A notable example is the collaboration between financial institutions and cryptocurrency exchanges, such as the partnership forged with Coinbase back in 2016. This collaboration was emblematic of the gradual acceptance and integration of Bitcoin into the broader financial ecosystem, highlighting its emergence as a distinct and viable asset class. Overall, the approval of a Bitcoin ETF and collaborations with industry players like Coinbase signal a broader trend towards the diversification and maturation of investment opportunities within the digital asset space. As regulatory frameworks continue to evolve and institutional adoption grows, Bitcoin and other cryptocurrencies are poised to play an increasingly significant role in shaping the future of finance.
Any advisor, asset allocator knows that if you have the opportunity to find a new asset class with low correlation to other asset classes in terms of returns, what will typically happen is if you put a slice of it in the portfolio, you will increase returns per unit of risk. So I think it's very important that advisors, asset allocators have a point of view on this. I mean, you may say you don't believe in this for whatever the reasons are that we won't be able to understand, but you have to take a point of view now because and we've done the paper on a new asset class and how many ways you can recognize it as a new asset class. So that's what I would say. I do want to make one comment. I've been chomping at the bit because we just learned this really today. There is something going on in the world that I think is going to highlight the importance of Bitcoin in another way. We're talking about the developed world here, but in the emerging markets, something is going on today. Has been going on for the last few weeks in Nigeria. Actually, since last June, when they floated their currency, then the Naira has depreciated by 2/3. Now, can you imagine living in Nigeria, having all of your assets and your wages in Naira? You've just lost 2/3 of your purchasing power and 2/3 of your wealth if you have everything, right? We're very interested in the emerging markets and how Bitcoin is going to save purchasing power, save wealth. There is actually, we're invested in a company in our venture fund, Chipper Cash, that has given Nigerians access to crypto assets. Which this is the only thing. And of course, they have appreciated dramatically as the Naira has been collapsing, much like Bitcoin did even here in this country last year during the regional bank crisis. When regional banks were imploding, Bitcoin went up from $20,000 to more than $40,000. It doubled.
Bitcoin's emergence has triggered a paradigm shift in financial discussions, particularly within emerging markets like Nigeria. Amidst the turbulence of currency depreciation, there's a notable pivot towards exploring how Bitcoin could serve as a bulwark against such economic uncertainties. In Nigeria, where currency devaluation has been a recurring challenge, Bitcoin's role as a potential safeguard for wealth has garnered considerable attention. The traditional methods of preserving wealth, such as holding onto fiat currency or investing in tangible assets like real estate, have become increasingly precarious in the face of volatile economic conditions. In this context, Bitcoin offers a digital alternative that transcends the limitations of geographical boundaries and centralized control. The appeal of Bitcoin lies in its decentralized nature and finite supply. Unlike fiat currencies, which are subject to the whims of central banks and government policies, Bitcoin operates on a predetermined algorithm that caps its total supply at 21 million coins. This scarcity imbues Bitcoin with intrinsic value, akin to digital gold, making it an attractive store of wealth in environments plagued by hyperinflation or currency instability. Moreover, Bitcoin's accessibility has democratized wealth preservation, particularly for individuals in emerging markets who may lack access to traditional banking services. With just an internet connection and a smartphone, anyone can participate in the Bitcoin ecosystem, enabling financial inclusion on a scale previously unimaginable. However, Bitcoin's journey in emerging markets like Nigeria is not without its challenges. Regulatory uncertainties, technological barriers, and the lingering stigma associated with cryptocurrencies pose significant hurdles to widespread adoption. Moreover, the inherent volatility of Bitcoin's price presents both opportunities and risks for investors seeking to navigate turbulent economic waters. Despite these challenges, the growing interest in Bitcoin within emerging markets underscores its potential to redefine the global financial landscape. As conversations around wealth preservation evolve, Bitcoin's role as a decentralized hedge against currency depreciation is likely to become increasingly prominent, offering newfound hope for individuals seeking stability in uncertain times.
So I think we're getting glimpses of how important this new asset class is going to be to everyone, no matter because Bitcoin has no counterparty risk like our banks. It's fully decentralized, completely transparent. So I think just speaking about it in this way, we can talk about Bitcoin as both a risk-on asset. You've heard a lot about that here, all of the exciting potential new opportunities. But it is also a risk-off asset, which, the proof of concept for the U.S. was our regional bank crisis last year. The proof of concept for us when we first allocated to Bitcoin in 2015 was Greece was threatening to pull out of the EU. And so there was this fear that we were going back into the European sovereign debt crisis. And every time that flashed in the news, Bitcoin went up. So that was our first clue way back then. Wait a minute, could this be risk off as well as risk on? And I think Nigeria is truly proof of concept now.